Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up DailyFX. And usually the first thing I do when I get there is scroll down to click on Jamie's report. So let's see what he has to say about the currency markets today. Reading the synopsis on top. Remaining above 134.85 keeps euro-dollar structure bullish. A clear five-wave rally from last week's low is evident in the pound dollar, indicating that the larger trend has turned up. So let's scroll down to see what he has to say about the euro dollar. Again, I just want to focus on the last thing here. The count is valid as long as price is above 134.85. So we're gonna go back to that once I pull up the charts. But I also want to focus on the dollar yen, as that's what I've been focusing on in my reports. And go ahead and read the synopsis. Resistance has been strong the past few days near 103, as Jamie correctly predicted. Psychological resistance as well as the 50% of the decline from 108.07. This is also where wave A and C equal. A bearish bias is warranted against the recent highs, and those recent highs are at 103.10. So let's go ahead and pull up the charts, and the first chart is the euro dollar. And again, as Jamie was mentioning, what he's calling for now is a series of, this is going to be a larger move, and these are just a series of wave 1 and wave 2s. And we have wave 1, wave 2, wave 1, and then another wave 2 down here. So as long as prices remain above that 134.85 area, which I've highlighted on the chart below, he's going to remain bullish. And we can also see a nice gap. I believe that's on the Sunday open, and that gap has filled. So personally, I'd move that support level down actually to that 34.58 area for me personally to remain bullish on the pair. But again, these are general areas, so you can kind of combine, Jamie's area 34.85 and my area, which would be 34.60. There's no need to ever be that precise with these things anyway. So that's personally what I'm looking for with the euro dollar. So let's go ahead and pull up the dollar yen, as again, that's what we have been focusing on. And if you recall in last night's report, which is located just on the post above this report that you're listening to right now, Jamie was calling for resistance at about 102.81. I personally said that, we can expand that in between 102.80 and 103.50, and prices again made that high near 103.10 and left behind a pretty long wick up there. So as Jamie mentioned in his report, and again, he's been spot on in his calls on the dollar yen, we can have a slight bearish bias against that 103.10 high. And we can also see that prices left behind what could be a borderline doji candle as well. So that, again, would reiterate and that 103.10 level as being important resistance. But what do you do now if prices are well beneath that? They're about 120 pips beneath that level right now in the 101 area. Of course, it depends when you're listening to my report, as prices have been quite volatile as of late. So what do we do? What I would suggest with this information is tonight, hopefully last night you were listening to the reports, maybe you were able to get an entry close to that 103 area. If not, if you're listening to the reports for the first time tonight, again, we're going to have a bearish bias against that 103.10 level, so we might look for a rally up towards that high and look to short the pair, maybe I would say in the 102.50 area to maybe 102.80 with a stop maybe 15-20 pips above that 103.10 area. But again, as I was mentioning last night, that would be a shorter term trade. Even if prices were to break that 103.10 area, I'd still remain bearish against the 103.50 area in general. So that's just something to look for moving forward. Again, the 103.50 area is the former breakout level, which should act as resistance in the future. So maybe a shorter term trade as prices get up to that 103.10 area. You might take a shot maybe when they approach 103 with a stop above 103.10. You can get a little aggressive. But again, if prices do break that level, it's not the end of the world and it's not the end of the trade. We might look to get a better entry closer to that 103. Maybe I would call it 103.25 to the 103.50 area. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.